Okay, boys, working on from V, we now move on to VI, and this is our bank reconciliation. Okay, so let's open up our next work in here, which is working 14. Okay, we're correcting our bank. Okay, as I said to you before, as this is not a T account, it's just a comparison between the two banks. Okay, so first of all, we look at our own bank account, okay, versus the bank statement itself. And let's hope that we can get these two to balance. So we take our own bank from the trial balance, and it was an overdraft of 33,000. Okay, and the bank statement gave us an overdraft of 31,280. Okay, let's look at the discrepancies. So a check for 640, okay, issued to a supplier, so a creditor, okay, had been entered in the books, cash book and ledger, okay, as 460, when it should have been 640. Okay, so the difference then, if I come over here and you can see this yourselves, okay, 640 is what the check actually was, okay, but we put it in our books and ledgers incorrectly as 460. So the difference between the two then, when you subtract them away from each other, is €180. Okay, that means that an extra 180 should have been taken out of the bank because we only took away 460 when it should have been 640. And we need to go back up then and obviously take away an additional 180 from our creditors in a second. Okay, well actually we can do it now because I don't believe we've opened up creditors. Okay, so working 15. Okay, open up creditors. Okay, and the creditors figure from the trial balance there. Where in the name of God are they there? There. Okay, 82,200. Okay, so we can subtract an additional 180 from that. Okay, because we paid 640, but we only reduced our creditors by 460, so we reduced them by an additional 180. Okay, so that's that corrected. Okay, so now it says a credit transfer of 900 had been paid directly into our firm's bank account. Okay, so we received 900 into our bank account. Okay, on behalf of a debtor, okay, who was recently being declared bankrupt, and this represents a first and final payment of 30 cents in the euro. So what we have here, lads, again, is we have a bad debt. Okay. Okay, so our bad debt, okay, if this 900 euro represents 30%, okay, well then 900 divided by 0.3 will give you the full debt, which was 3,000 euro, but they've paid 900 of it, so that means the total bad debt is 2,100. Okay. All right, so just to reiterate that, lads. Okay, I'll come over here and make a little note of it. So this 900, okay, euro is equivalent to 30%. So we worked out that 100% of this debt was 3,000 euro. Okay, you can do that in loads of different ways. Okay, 900 divided by 30 multiplied by 100 will give you 3 grand. Okay, so that means that the 70% of the debt that's now written off as bad is got to be the 2,100 because you've received the 900. So that's where I get the 2,100 from. Okay, and that 2,100 then, okay, is a selling and distribution expense. We must also open up our debtors. I don't believe we've opened up debtors already. Just let me double check. Doesn't sound familiar. Okay, no. Okay, so let's open up our debtors. So our debtors are taken from the trial balance there. Is 98,400. Okay, and we subtract the full 3,000 from that. All right. Well, we have opened up debtors before, haven't we? It's just after popping into my head there. Apologies, boys. Okay, it's up here somewhere, wasn't it? Where was it? There it is. Okay, my apologies, boys. We had opened it up. All right, so working 7. So now the debtors are going to reduce by an additional 3,000 euro. Okay, now I believe, okay, let me just look at the rest of the question here. Okay, yeah, that's the last entry for debtors. So what I can do now is get the balance, my closing balance is 98,400 I should say, minus 3450, and that gives me 94,000. So I have my BD, my closing balance, which is one I want, which is 94,950. Okay, we know that we're going to need that for the current assets, but we're going to need it to adjust bad debts provisions in a second. All right. Okay, so that's that bad debts taken care of. All right. And the last thing it says then is that a check for fees of €1,000 issued to a director had not been presented for payment. So that means I hadn't been presented to the bank just yet. So that's going to be another €1,000 increase in my overdraft. Okay, so let's hope that these two add up. So you have minus 33,000 minus 180 plus 900 gives us 32,000. Okay, €280 of an overdraft, and minus 31,280 minus 1,000. Okay, gives us 32,280. So correct. They balance out. So this here now is an overdraft from the bank, so it's a current liability. Okay, and that's all of VI taken care of. Okay, next working I can open up here now is in regards to advertising. Okay, and it says here that the advertising payment is for an 18-month campaign which began on the 1st of the 10th, 2011. So if you go back up to the trial balance, you see the second last entry there in your trial balance is 4,800. But we were told that this is for a 18-month campaign. So 4,800 divided by 18, okay, gives us decimal here. So let's just, when it does that there for you, all right, okay, it will round off to a nice number when you multiply by the amount of months that you had it for this year. Okay, so if this began on the 1st of the 10th, 2011, that means we had it for 10, 11, 12. That means we had it for 3 months for this year. So 4,800 divided by 18, multiply that by 3, gives us a nice round figure of €800. Okay, so that €800 is a selling and distribution expense for this year. But don't forget then that your 4,800 minus the 800 equals 4,000. And that is your advertising prepaid, okay, for the next 15 months. So an expense prepaid is a current asset. All right. Okay, on to working 18. We're nearly there now. It says provisions should be made for both investment income and in debenture interest due. We've already done that. Okay, and provision for bad debts to be adjusted to 4% to debtors. So this is our provision for bad debts. So go up and get our debtors figure. Okay, and there it is, 94,950. 94,950. Okay, and now we're going to multiply that by 4%. So 94,950 multiplied by 4% gives us 3,798. Okay, so that's your new provision. All right, and we know where that's going to go. We're going to use that in the current assets to take away from debtors in the balance sheet. What about the old provision? Okay, the bad debts provision used to be 3,000. So we've got a new provision, which is 3,798. And we've got an old provision, okay, which is €3,000. So therefore, there's been an increase of €798. Okay, which means that's a selling and distribution expense. Okay, and then it says finally buildings to be depreciated by 2% of cost. So this is depreciation on buildings. Okay, and looking now to this question, there is nothing to do with buildings, gentlemen. There's no buildings sold, there's no buildings bought, there's no extensions or anything like that done, no revaluation. So the buildings to be depreciated by 2% of cost is simply buildings at cost is 800,000. Okay, multiply that by 2% gives us 16,000. Okay, and that's an admin expense. All right, gentlemen, that is your workings complete.